Do you want to successfully complete the C213 Objective Assessment Exam? Then you are in the right place. Our website provides a list of questions and answers for your success in the C213 OA exam for free. We understand that acing your OA exam can be quite challenging. That's why we provide completely free exam guides and practice questions for you. In this video, we will cover questions from accounting principles, financial statements, financial ratios, types of accounts, and regulatory bodies. So, let's get started. 1. Which of the following organisations was formed to develop global accounting standards? A. Financial Accounting Standards Board. B. International Accounting Standards Board. C. Securities and Exchange Commission. D. Public Company Accounting Oversight Board. What do you think is the answer? Correct answer, B. International Accounting Standards Board. Explanation. Option B is correct because the International Accounting Standards Board is an independent private sector body that develops and approves international financial reporting standards. The ISB operates under the oversight of the IFRS Foundation. Its main objective is to create a single set of high-quality, understandable, enforceable, and globally accepted accounting standards to make financial information from companies comparable, regardless of their location. Option A is incorrect because the Financial Accounting Standards Board is responsible for establishing accounting rules known as Generally Accepted Accounting Principles specifically for companies in the United States. Option C is incorrect because the Securities and Exchange Commission is a US government agency that regulates securities markets and protects investors. Option D is incorrect because the Public Company Accounting Oversight Board is a non-profit corporation established by the US Congress to oversee the audits of public companies in order to protect investors. Two. Which of the following represents the basic accounting equation? A. Assets equals liabilities plus equity. B. Revenues equals assets. Liabilities. C. Liabilities equals assets. Equity. D. Equity equals revenues, expenses. What do you think is the answer? Correct answer, A. Assets equals liabilities plus equity. Explanation. Option A is correct because the basic accounting equation is the fundamental formula of accounting. Assets equals liabilities plus equity. This equation must always remain in balance. Assets are the resources a company owns, liabilities are what the company owes, and equity represents the owner's stake in the company. Option B is incorrect because this formula does not represent a standard accounting principle. Option B is incorrect because this formula does not represent a standard accounting principle. Option D is incorrect because this formula represents the calculation of net income, which is a component of changes in equity, not the basic accounting equation itself. 3. Which organization regulates the US stock exchanges and aims to protect investors? A. Financial Accounting Standards Board. B. International Accounting Standards Board. C. Securities and Exchange Commission. D. American Institute of Certified Public Accountants. Do you know the answer? Correct answer, C. Securities and Exchange Commission. Explanation. Option C is correct because the Securities and Exchange Commission is an independent agency of the US federal government. Its primary mission is to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. It enforces laws regarding the buying and selling of stocks and bonds and requires public companies to disclose meaningful financial and other information to the public. So, Option A is incorrect because the Financial Accounting Standards Board is a private, non-profit organization that sets accounting rules for US companies. Option B is incorrect because the International Accounting Standards Board is responsible for developing global accounting standards. Option D is incorrect because the American Institute of Certified Public Accountants is the national professional organization for certified public accountants in the United States. 4. Which accounting principle emphasizes the need to report losses as soon as they are foreseen, but delays reporting gains until they are realized? A. Matching principle. B. Conservatism. C. Full disclosure principle. D. Historical cost principle. What do you think is the answer? Correct answer, B. Conservatism. Explanation: Option B is correct because the principle of conservatism in accounting dictates that when faced with uncertainty, accountants should choose the option that is less likely to overstate assets or income and more likely to recognize potential losses sooner rather than later. This cautious approach ensures that financial statements do not present an overly optimistic view of the company's financial health. Option A is incorrect because the matching principle requires that expenses be recorded in the same period as the revenues they help to generate. Option C is incorrect because the full disclosure principle requires companies to report all relevant and significant information that would affect a user's understanding of the financial statements. Option D is incorrect because the historical cost principle requires that assets be recorded at their original purchase cost. 5. Which of the following best describes liquidity in financial terms? A. The ability to convert assets into cash quickly. B. The ability to generate profit over time. C. The ability to meet long-term financial obligations. D. The ability to increase stockholder value. Can you guess the answer? Correct answer, A. The ability to convert assets into cash quickly. Explanation: Option A is correct because liquidity refers to how easily and quickly a company can convert its assets into cash without a significant loss in value. High liquidity means a company has sufficient cash or assets that can be quickly sold to meet its short-term obligations. Option B is incorrect because the ability to generate profit over time describes profitability. Option C is incorrect because the ability to meet long-term financial obligations describes solvency. Option D is incorrect because the ability to increase stockholder value is a primary goal for a company's management, not a definition of liquidity. 6. Which of the following is considered a current liability? A. Bonds payable. B. Notes payable due in 5 years. C. Accounts payable. D. Common stock. Can you guess the answer? Correct answer, C. Accounts payable. Explanation: Option C is correct because a current liability is a debt or obligation that a company expects to pay off within 1 year or one operating cycle, whichever is longer. Accounts payable represents the money a company owes to its suppliers for goods or services purchased on credit, which are typically due in a short period. Option A is incorrect because bonds payable are typically long-term liabilities, as they are usually due in more than 1 year. Option B is incorrect because notes payable due in 5 years are long-term liabilities, as the settlement date is beyond 1 year. Option D is incorrect because common stock is a component of a shareholder's equity, representing ownership in the company, not a liability. 7. Which financial ratio is used to assess a company's ability to pay off its short-term obligations? A. Price-earnings ratio. B. Debt-to-equity ratio. C. Current ratio. D. Return on equity. What do you think is the answer? Correct answer, C. Current ratio. Explanation. Option C is correct because the current ratio is a liquidity ratio that measures a company's ability to cover its short-term debts with its short-term assets. It is calculated as current assets divided by current liabilities. A higher ratio generally indicates a stronger ability to meet immediate financial obligations. Option A is incorrect because the price-earnings ratio is a stock valuation measure that compares a company's stock price to its earnings per share. Option B is incorrect because the debt-to-equity ratio is a solvency ratio that measures a company's financial leverage by comparing its total debt to its total equity. Option D is incorrect because return on equity is a profitability ratio that measures how much profit a company generates with the money invested by its shareholders. 8. Which of the following best describes the concept of materiality in accounting? A. All financial statements must be accurate to the penny. B. Only significant amounts that could affect decisions need to be disclosed. C. All expenses must be recognised in the period they occur. D. Gains and losses are recognised at the time of transaction. Can you guess the answer? Correct answer. B. Only significant amounts that could affect decisions need to be disclosed. Explanation. Option B is correct because materiality is an accounting concept that states information is significant if its omission or misstatement could influence the economic decisions of users of the financial statements. Accountants can disregard trivial matters, but they must disclose all items that are material or important enough to make a difference to a user. Option A is incorrect because perfect accuracy to the penny is often impractical and not required if deviations are immaterial. Option C is incorrect as this statement describes the matching principle. Option D is incorrect as this statement relates to the revenue and expense recognition principles. 9. Which financial statement provides a summary of a company's revenues and expenses over a period of time? A. Balance sheet. B. Income statement. C. Statement of cash flows. D. Statement of retained earnings. What do you think is the answer? Correct answer, B. Income statement. Explanation. Option B is correct because the income statement, also known as the profit and loss statement, reports a company's financial performance over a specific accounting period. It summarizes all revenues earned and all expenses incurred to arrive at the company's net income or net loss for that period. Option A is incorrect because the balance sheet provides a snapshot of a company's financial position at a single point in time. Option C is incorrect because the statement of cash flows shows how cash has moved into and out of the company over a period. Option D is incorrect because the statement of retained earnings shows the changes in a company's accumulated profits over a period. 10. Which of the following is true of the balance sheet? A. It reports a company's profitability. B. It reports a company's financial position at a specific point in time. C. It includes information about cash flows. D. It summarizes changes in equity. Can you guess the answer? Correct answer. B. It reports a company's financial position at a specific point in time. Explanation. Option B is correct because the balance sheet is a financial snapshot of a company. It presents what the company owns, what it owes, and the owner's stake on a specific date, such as of December 31st, 2023. Option A is incorrect because a company's profitability is reported on the income statement. Option C is incorrect because detailed information about cash flows is reported on the statement of cash flows, although the ending cash balance does appear on the balance sheet. Option D is incorrect because changes in equity are summarized in the statement of shareholders' equity or the statement of retained earnings. 11. Which type of account would inventory be classified as? A. Asset, B. Liability, C. Equity, D. Expense. Can you guess the answer? Correct answer, A. Asset. Explanation: Option A is correct because inventory consists of goods and materials that a company holds for the ultimate purpose of resale. Since these items have future economic value and are expected to be converted into cash when sold, inventory is classified as an asset, specifically a current asset, on the balance sheet. Option B is incorrect because a liability is an obligation or something the company owes. Option C is incorrect because equity represents the owner's residual interest in the assets of the company after deducting liabilities. Option D is incorrect because inventory is an asset until it is sold. At the point of sale, its cost is transferred to an expense account called cost of goods sold. 12. Which of the following describes the matching principle in accounting? A. Matching expenses with the revenues they help generate. B. Recognizing revenues when cash is received. C. Matching assets with liabilities on the balance sheet. D. Matching expenses with dividends paid. What do you think is the answer? Correct answer, A. Matching expenses with the revenues they helped generate. Explanation: Option A is correct because the matching principle is a cornerstone of accrual accounting. It directs a company to report an expense on its income statement in the same period as the related revenue it helped to earn. This provides a more accurate picture of a company's profitability for a given period. Option B is incorrect because recognizing revenues when cash is received is a characteristic of cash basis accounting, not the matching principle. Option C is incorrect because the matching principle does not relate to matching assets with liabilities. This relationship is defined by the basic accounting equation. Option D is incorrect because dividends are a distribution of profits to shareholders, not an expense to be matched with revenues. 13. Which financial statement would you consult to evaluate a company's operating, investing, and financing activities? A. Income statement. B. Balance sheet. C. Statement of retained earnings. D. Statement of cash flows. What do you think is the answer? Correct answer, D. Statement of cash flows. Explanation: Option D is correct because the statement of cash flows is specifically designed to show where a company's cash came from and where it went during a period. It categorizes these cash movements into three distinct activities: operating activities, investing activities, and financing activities. Option A is incorrect because the income statement reports revenues and expenses to show profitability. Option B is incorrect because the balance sheet shows assets, liabilities, and equity at a specific point in time. Option C is incorrect because the statement of retained earnings details the changes in a company's accumulated profits. 14. What is the primary function of the Financial Accounting Standards Board? A. To audit publicly traded companies. B. To establish accounting rules in the United States. C. To regulate tax policies. D. To set global accounting standards. Can you guess the answer? Correct answer. B. To establish accounting rules in the United States. Explanation. Option B is correct because the Financial Accounting Standards Board is the independent private sector organization in the US responsible for establishing and improving the set of accounting rules and guidelines that companies must follow. These rules are known as US Generally Accepted Accounting Principles. Option A is incorrect because the auditing of publicly traded companies is performed by independent CPA firms and overseen by the Public Company Accounting Oversight Board. Option C is incorrect because tax policies are regulated by government bodies such as the Internal Revenue Service and the US Congress. Option D is incorrect because setting global accounting standards is the responsibility of the International Accounting Standards Board. 15. What does the term gross profit refer to? A. Revenues minus total expenses. B. Revenues minus cost of goods sold. C. Assets minus liabilities. D. Net income plus taxes. Can you guess the answer? Correct answer. B. Revenues minus cost of goods sold. Explanation. Option B is correct because gross profit is the profit a company makes from selling its products or services before deducting its operating, interest and tax expenses. It is calculated as total revenue minus the cost of goods sold, which are the direct costs attributable to the production of the goods sold. Option A is incorrect because revenues minus total expenses calculates net income. Option C is incorrect because assets minus liabilities equals shareholders' equity. Option D is incorrect because this formula does not represent a standard accounting calculation. 16. Which of the following ratios is used to measure a company's profitability? A. Return on equity. B. Current ratio. C. Debt to equity ratio. D. Asset turnover. Do you know the answer? Correct answer. A. Return on equity. Explanation. Option A is correct because return on equity is a key profitability ratio that measures a company's ability to generate profit from the investments made by its shareholders. It is calculated as net income divided by shareholders' equity and indicates how effectively management is using equity financing to create profits. Option B is incorrect because the current ratio is a liquidity ratio used to measure a company's ability to pay its short-term debts. Option C is incorrect because the debt to equity ratio is a solvency ratio that measures a company's financial leverage. Option D is incorrect because the asset turnover ratio is an efficiency ratio that measures how effectively a company uses its assets to generate sales. 17. Which of the following financial statements is often referred to as the statement of financial position? A. Balance sheet. B. Income statement. C. Statement of cash flows. D. Statement of retained earnings. Can you guess the answer? Correct answer. A. Balance sheet. Explanation. Option A is correct because the balance sheet is also formally known as the statement of financial position. This name is fitting as it provides a snapshot of a company's financial health or position on a specific date by listing its assets, liabilities, and shareholders' equity. Option B is incorrect because the income statement reports financial performance over a period of time. Option C is incorrect because the statement of cash flows reports cash movements over a period of time. Option D is incorrect because the statement of retained earnings explains the changes in accumulated profits over a period of time. 18. Which of the following is considered a financing activity? A. Buying new machinery. B. Issuing stock to raise capital. C. Paying wages to employees. D. Purchasing raw materials for production. Do you know the answer? Correct answer, B. Issuing stock to raise capital. Explanation. Option B is correct because financing activities on the statement of cash flows include transactions with owners and creditors to raise capital and repay it. Issuing stock involves selling ownership shares to investors to raise money for the business, which is a classic financing activity. Option A is incorrect because buying new machinery is an investing activity, as it involves the purchase of a long-term asset. Option C is incorrect because paying wages to employees is an operating activity related to the day-to-day running of the business. Option D is incorrect because purchasing raw materials for production is an operating activity. 19. Which accounting concept dictates that personal financial transactions should be kept separate from business financial transactions? A. Historical cost principle. B. Entity concept. C. Conservatism. D. Matching principle. Can you guess the answer? Correct answer, B. Entity concept. Explanation. Option B is correct because the entity concept, also known as the separate entity or economic entity assumption, states that a business is an economic unit that is separate and distinct from its owners. Therefore, the business's financial records and transactions must be kept completely separate from the personal finances of its owner. Option A is incorrect because the historical cost principle requires assets to be recorded at their original cost. Option C is incorrect because the conservatism principle guides accountants to be cautious in their reporting, especially when facing uncertainty. Option D is incorrect because the matching principle is about aligning expenses with the revenues they helped generate. 20. Which of the following ratios provides insight into a company's long-term solvency? A. Current ratio. B. Price-earnings ratio. C. Debt-to-equity ratio. D. Return on assets. Can you guess the answer? Correct answer, C. Debt-to-equity ratio. Explanation. Option C is correct because the debt-to-equity ratio is a key measure of a company's solvency, which is its ability to meet its long-term financial obligations. This ratio compares a company's total liabilities to its shareholders' equity, indicating how much debt the company is using to finance its assets relative to the amount of its own funds. A high ratio suggests higher risk and greater reliance on debt. Option A is incorrect because the current ratio measures short-term liquidity, not long-term solvency. Option B is incorrect because the price-earnings ratio is a stock valuation measure. Option D is incorrect because return on assets is a profitability ratio. 21. What is the primary purpose of the statement of retained earnings? A. To show how retained earnings have changed over time. B. To report revenues and expenses. C. To reconcile net income with cash flows. D. To show the company's cash inflows and outflows. Do you know the answer? Correct answer. A. To show how retained earnings have changed over time. Explanation. Option A is correct, because the primary purpose of the statement of retained earnings is to explain the changes in a company's retained earnings account over a specific accounting period. It reconciles the beginning and ending balances by adding the period's net income and subtracting any dividends paid to shareholders. Option B is incorrect because reporting revenues and expenses is the purpose of the income statement. Option C is incorrect because reconciling net income with cash flows is a key part of the operating activities section of the statement of cash flows. Option D is incorrect because showing the company's cash inflows and outflows is the purpose of the statement of cash flows. 22. Which of the following is considered a non-current asset? A. Cash. B. Accounts receivable. C. Inventory. D. Buildings. Do you know the answer? Correct answer, D. Buildings. Explanation: Option D is correct because a non-current asset, also called a long-term or fixed asset, is a resource owned by a company that is not expected to be converted into cash or used up within 1 year. Buildings are a prime example, as they are used in business operations over many years. Option A is incorrect because cash is the most liquid current asset. Option B is incorrect because accounts receivable, which is money owed by customers, is expected to be collected within a year and is a current asset. Option C is incorrect because inventory is a current asset, as it is expected to be sold within a year. 23. Which of the following accounting assumptions assumes that a company will continue to operate indefinitely? A. Time period assumption. B. Going concern assumption. C. Full disclosure principle. D. Conservatism. What do you think is the answer? Correct answer, B. Going concern assumption. Explanation: Option B is correct because the going concern assumption is the fundamental premise that a business will continue its operations for the foreseeable future and will not liquidate or be forced to discontinue operations. This assumption justifies the valuation of assets on a historical cost basis rather than their liquidation value. Option A is incorrect because the time period assumption allows a company's complex and ongoing activities to be divided into regular, distinct time periods for reporting purposes. Option C is incorrect because the full disclosure principle requires that all relevant information be included in the financial statements. Option D is incorrect because the conservatism principle advocates for cautious reporting in the face of uncertainty. 24. Which of the following items would be classified as an operating activity in the statement of cash flows? A. Paying dividends to shareholders. B. Selling a building. C. Paying taxes. D. Borrowing money from the bank. Do you know the answer? Correct answer, C. Paying taxes. Explanation: Option C is correct because operating activities on the statement of cash flows include the principal revenue-producing activities of the company and other activities that are not investing or financing. Paying income taxes is a direct result of the profits generated from these core operations, making it an operating cash outflow. Option A is incorrect because paying dividends to shareholders is a financing activity, as it is a return of capital to owners. Option B is incorrect because selling a building is an investing activity, as it involves the disposal of a long-term asset. Option D is incorrect because borrowing money from the bank is a financing activity, as it involves obtaining funds from a creditor. 25. Which of the following best describes comprehensive income? A. Net income plus changes in owner investment. B. Net income plus or minus other wealth changes like currency exchange rates. C. Gross profit minus depreciation expenses. D. Revenues plus dividends. Can you guess the answer? Correct answer, B. Net income plus or minus other wealth changes like currency exchange rates. Explanation. Option B is correct because comprehensive income is a broad measure of the change in a company's equity during a period from non-owner sources. It includes net income from the income statement plus or minus other comprehensive income items, which are gains and losses that bypass the income statement but still affect equity, such as unrealized gains on certain investments or foreign currency translation adjustments. Option A is incorrect because changes in owner investment, like issuing stock, are financing activities and not part of comprehensive income. Option C is incorrect because this describes a calculation on the income statement, but not comprehensive income. Option D is incorrect as this is not a standard financial calculation. 26. Which financial ratio is used to measure how effectively a company is using its assets to generate sales? A. Current ratio. B. Return on equity. C. Asset turnover. D. Debt to equity ratio. Do you know the answer? Correct answer, C. Asset turnover. Explanation. Option C is correct because the asset turnover ratio is an efficiency ratio that measures how well a company uses its assets to generate sales revenue. It is calculated as net sales divided by average total assets. A higher ratio indicates that the company is generating more revenue per dollar of assets. Option A is incorrect because the current ratio is a liquidity ratio. Option B is incorrect because return on equity is a profitability ratio measuring returns to shareholders. Option D is incorrect because the debt to equity ratio is a solvency ratio measuring financial leverage. 27. Which accounting concept requires that expenses be recognized in the same period as the revenues they help generate? A. Conservatism. B. Matching principle. C. Historical cost principle. D. Full disclosure principle. Do you know the answer? Correct answer, B. Matching principle. Explanation. Option B is correct because the matching principle is a core concept of accrual accounting. It directs that expenses should be recorded in the same accounting period as the revenues that those expenses helped to create. This matching of costs with related income provides a more accurate representation of a company's profitability for that period. Option A is incorrect because conservatism is about being cautious and not overstating assets or income. Option C is incorrect because the historical cost principle requires assets to be recorded at their original purchase price. Option D is incorrect because the full disclosure principle requires that all important information be reported in the financial statements. (28) Which of the following is considered an extraordinary item on the income statement? A. Loss from a natural disaster. B. Purchase of inventory. C. Depreciation expense. D. Interest expense. What do you think is the answer? Correct answer, A. Loss from a natural disaster. Explanation. Option A is correct because an extraordinary item refers to an event or transaction that is both unusual in nature and infrequent in occurrence. A significant loss from a rare natural disaster, like a hurricane in a region not prone to them, would fit this description. Such items were historically reported separately on the income statement because they are not the part of a company's normal business operations. Current accounting standards now generally require such items to be included in income from continuing operations, but disclosed separately if material. Option B is incorrect because purchasing inventory is a normal operating activity. Option C is incorrect because depreciation expense is a regular recurring non-cash expense. Option D is incorrect because interest expense is a common non-operating expense. 29. Which of the following best describes earnings per share? A. The total amount of dividends paid to shareholders. B. The net income attributed to each share of stock. C. The ratio of assets to liabilities. D. The total earnings of the company. What do you think is the answer? Correct answer, B. The net income attributed to each share of stock. Explanation. Option B is correct because earnings per share is a widely used financial metric that indicates the portion of a company's profit allocated to each outstanding share of common stock. It is calculated by taking the company's net income after subtracting any preferred dividends and dividing it by the weighted average number of common shares outstanding. Option A is incorrect because the amount of dividends paid per share is known as dividends per share. Option C is incorrect because the ratio of assets to liabilities is not what EPS represents. Various ratios like the debt to asset ratio look at this relationship. Option D is incorrect because the total earnings of the company is called net income. 30. Which of the following financial statements would you consult to find a company's gross profit? A. Income statement. B. Balance sheet. C. Statement of cash flows. D. Statement of retained earnings. What do you think is the answer? Correct answer, A. Income statement. Explanation. Option A is correct because gross profit is a key line item on a company's income statement. It is calculated by subtracting the cost of goods sold from the total sales revenue for a period, showing the profit made directly from the sale of goods or services. Option B is incorrect because the balance sheet reports a company's assets, liabilities and equity at a point in time. Option C is incorrect because the statement of cash flows reports cash inflows and outflows. Option D is incorrect because the statement of retained earnings details changes in accumulated profits. 31. Which of the following is considered an intangible asset? A. Goodwill. B. Land. C. Accounts payable. D. Inventory. What do you think is the answer? Correct answer, A. Goodwill. Explanation. Option A is correct because an intangible asset is a non-physical asset that has value. Goodwill is an intangible asset that arises when one company acquires another for a price greater than the fair market value of its identifiable net assets. It represents non-physical assets like brand reputation, customer loyalty, and intellectual property. Option B is incorrect because land is a tangible, long-term asset. Option C is incorrect because accounts payable is a current liability representing money owed by the company. Option D is incorrect because inventory is a tangible, current asset. 32. Which of the following ratios measures a company's liquidity? A. Asset turnover. B. Price earnings ratio. C. Current ratio. D. Return on equity. Do you know the answer? Correct answer, C, current ratio. Explanation, option C is correct because the current ratio is a primary measure of a company's liquidity, which is its ability to meet its short-term obligations due within 1 year. It is calculated as current assets divided by current liabilities. Option A is incorrect because the asset turnover ratio is an efficiency ratio that measures how effectively assets are used to generate sales. Option B is incorrect because the price-earnings ratio is a market valuation ratio used by investors. Option D is incorrect because return on equity is a profitability ratio. 33. Which of the following is an example of a non-operating item on the income statement? A. Interest expense. B. Cost of goods sold. C. Wages paid to employees. D. Sales revenue. What do you think is the answer? Correct answer, A. Interest expense. Explanation. Option A is correct because non-operating items on an income statement are revenues and expenses derived from activities outside a company's primary business operations. Interest expense is the cost of borrowing money and relates to the company's financing decisions, not its core operations, so it is classified as a non-operating item. Option B is incorrect because the cost of goods sold is a primary operating expense directly tied to generating revenue. Option C is incorrect because wages paid to employees are a standard operating expense. Option D is incorrect because sales revenue is the primary source of income from a company's core operations. 34. Which of the following accounting principles ensures that financial statements reflect a conservative estimate of a company's financial position? A. Conservatism. B. Matching principle. C. Historical cost principle. D. Full disclosure principle. Do you know the answer? Correct answer, A. Conservatism. Explanation. Option A is correct because the principle of conservatism advises that when there is uncertainty, accountants should choose the method of reporting that is least likely to overstate assets and income. This principle prioritizes recognizing potential losses and liabilities promptly, ensuring financial statements present a cautious and realistic view. Option B is incorrect because the matching principle relates to aligning expenses with revenues in the same period. Option C is incorrect because the historical cost principle mandates that assets are recorded at their original cost. Option D is incorrect because the full disclosure principle requires that all material and relevant information is disclosed in the financial statements. 35. Which of the following is a characteristic of managerial accounting? A. It is used by external stakeholders. B. It is focused on future projections. C. It is regulated by GAAP. D. It is primarily backward-looking. Can you guess the answer? Correct answer. B. It is focused on future projections. Explanation? Option B is correct because managerial accounting provides information to people inside an organization to help them make decisions, plan for the future, and control operations. A significant part of this involves creating budgets, forecasts, and other analyses that are forward-looking. Option A is incorrect because financial accounting is used by external stakeholders like investors and creditors. Option C is incorrect because managerial accounting is for internal use and is not strictly regulated by GAAP. It can be tailored to meet management's specific needs. Option D is incorrect because being primarily backward-looking is a characteristic of financial accounting, which reports on past events and performance. 36. Which of the following is not an example of a financing activity? A. Issuing bonds. B. Paying dividends. C. Borrowing money from a bank. D. Purchasing inventory. Can you guess the answer? Correct answer, D. Purchasing inventory. Explanation. Option D is correct because purchasing inventory is a fundamental part of a company's day-to-day business and is therefore classified as an operating activity. Financing activities relate to transactions with owners and creditors to raise and repay capital. Option A is incorrect because issuing bonds is a financing activity where a company borrows money from investors. Option B is incorrect because paying dividends is a financing activity that involves returning capital to shareholders. Option C is incorrect because borrowing money from a bank is a financing activity to obtain funds. 37. Which financial statement provides insight into a company's solvency? A. Statement of cash flows. B. Income statement. C. Balance sheet. D. Statement of retained earnings. Do you know the answer? Correct answer, C. Balance sheet. Explanation. Option C is correct because solvency is a company's ability to meet its long-term financial obligations. The balance sheet provides the necessary information to assess solvency by listing the company's long-term assets, long-term liabilities, and equity. Ratios derived from balance sheet data, like the debt-to-equity ratio, are key indicators of solvency. Option A is incorrect because the statement of cash flows primarily provides insight into a company's liquidity and cash management. Option B is incorrect because the income statement shows profitability over a period. Option D is incorrect because the statement of retained earnings shows changes in accumulated profits. 38. Which of the following items would be considered a current asset? A. Land. B. Prepaid expenses. C. Equipment. D. Patents. What do you think is the answer? Correct answer, B. Prepaid expenses. Explanation. Option B is correct because current assets are resources a company expects to use, sell, or convert into cash within 1 year. Prepaid expenses are payments made in advance for goods or services to be received in the near future, such as prepaid insurance or rent. Since the benefit will be realised within a year, they are classified as a current asset. Option A is incorrect because land is a non-current tangible asset. Option C is incorrect because equipment is a non-current tangible asset. Option D is incorrect because patents are non-current intangible assets. 39. Which of the following is an example of a capital lease? A. A lease where the lessee has the option to purchase the asset at the end of the lease term. B. A short-term rental of office space. C. A lease for office equipment that is renewable annually. D. A month-to-month rental agreement. What do you think is the answer? Correct answer. A. A lease where the lessee has the option to purchase the asset at the end of the lease term. Explanation. Option A is correct because a capital lease, now often called a finance lease under newer accounting standards, is treated as a purchase of an asset. One of the key criteria that defines a lease as a capital or finance lease is the inclusion of a bargain purchase option, which gives the lessee the option to buy the asset at a price significantly below its expected fair value at the end of the lease term. Option B is incorrect because a short-term rental of office space is typically classified as an operating lease. Option C is incorrect because a lease for office equipment that is renewable annually is likely an operating lease. Option D is incorrect because a month-to-month rental agreement is a short-term arrangement classified as an operating lease. 40. What is the purpose of depreciation in accounting? A. To allocate the cost of a long-term asset over its useful life. B. To increase the book value of an asset. C. To record the increase in value of property over time. D. To account for maintenance expenses. What do you think is the answer? Correct answer, A. To allocate the cost of a long-term asset over its useful life. Explanation. Option A is correct because depreciation is the accounting process of systematically allocating the cost of a tangible long-term asset to expense over its estimated useful life. This process matches the cost of the asset with the revenues it helps to generate each period, in accordance with the matching principle. Option B is incorrect because depreciation decreases, not increases, the book value of an asset over time. Option C is incorrect because depreciation accounts for the decline in an asset's value due to use and obsolescence, not an increase in value. Option D is incorrect because maintenance expenses are separate, operating costs that are expensed as they are incurred, not through depreciation. 41. Which of the following is considered a long-term liability? A. Accounts payable. B. Bonds payable. C. Prepaid expenses. D. Cash. Do you know the answer? Correct answer, B. Bonds payable. Explanation. Option B is correct because long-term liabilities are financial obligations that are due more than 1 year from the balance sheet date. Bonds payable are a common form of long-term debt, as companies issue bonds to borrow money for periods often ranging from 5 to 30 years. Option A is incorrect because accounts payable is a current liability, typically due within 30 to 60 days. Option C is incorrect because prepaid expenses are a current asset. Option D is incorrect because cash is a current asset. 42. Which of the following accounting assumptions ensures that financial transactions are recorded over consistent time periods? A. Going concern assumption. B. Time period assumption. C. Full disclosure principle. D. Matching principle. Can you guess the answer? Correct answer, B. Time period assumption. Explanation. Option B is correct because the time period assumption, also known as the periodicity assumption, states that the economic life of a business can be divided into artificial time periods, such as months, quarters, and years. This allows for the timely preparation of financial statements so users can evaluate and compare performance across consistent intervals. Option A is incorrect because the going concern assumption presumes that a business will continue to operate indefinitely. Option C is incorrect because the full disclosure principle requires the reporting of all relevant information. Option D is incorrect because the matching principle aligns expenses with the revenues they help generate. 43. Which of the following financial ratios is used to assess a company's profitability? A. Return on sales. B. Asset turnover. C. Current ratio. D. Debt ratio. What do you think is the answer? Correct answer, A. Return on sales. Explanation: Option A is correct because return on sales, also known as net profit margin, is a profitability ratio that measures how much profit is generated from each dollar of sales. It is calculated as net income divided by net sales and indicates a company's operational efficiency. Option B is incorrect because asset turnover is an efficiency ratio that measures how well assets are used to generate sales. Option C is incorrect because the current ratio is a liquidity ratio that measures the ability to pay short-term debts. Option D is incorrect because the debt ratio is a solvency ratio that measures the proportion of a company's assets financed through debt. 44. Which of the following is classified as an investing activity on the statement of cash flows? A. Issuing bonds. B. Buying equipment. C. Paying dividends. D. Borrowing money. Do you know the answer? Correct answer: B. Buying equipment. Explanation: Option B is correct because investing activities on the statement of cash flows include the purchase and sale of long-term assets and other investments. Buying equipment is a cash outflow for the acquisition of a long-term asset that will be used in the business, making it an investing activity. Option A is incorrect because issuing bonds is a financing activity, as it is a way to raise capital through debt. Option C is incorrect because paying dividends is a financing activity, representing a return of capital to owners. Option D is incorrect because borrowing money is a financing activity. 45. What does the price-earnings ratio indicate? A. The company's ability to pay off its short-term debts. B. The amount of money investors are willing to pay for each dollar of earnings. C. The profitability of the company compared to its assets. D. The efficiency with which a company uses its assets. What do you think is the answer? Correct answer: B. The amount of money investors are willing to pay for each dollar of earnings. Explanation: Option B is correct because the price-earnings ratio is a market valuation metric that compares a company's current stock price to its earnings per share. It effectively shows how much the market is willing to pay today for $1 of the company's current or future earnings. A high PE ratio can indicate that investors expect high future growth. Option A is incorrect because a company's ability to pay short-term debts is measured by liquidity ratios like the current ratio. Option C is incorrect because profitability relative to assets is measured by a ratio like return on assets. Option D is incorrect because the efficiency of asset use is measured by ratios like asset turnover. 46. Which financial statement reports the amount of dividends paid to shareholders? A. Income statement. B. Statement of retained earnings. C. Balance sheet. D. Statement of cash flows. Can you guess the answer? Correct answer: B. Statement of retained earnings. Explanation: Option B is correct because the statement of retained earnings explicitly shows the changes in the retained earnings account during a period. It starts with the beginning balance, adds net income, and subtracts dividends paid to arrive at the ending balance. Option A is incorrect because the income statement reports revenues and expenses to calculate net income. Dividends are a distribution of income, not an expense. Option C is incorrect because the balance sheet shows the ending balance of retained earnings at a point in time, but does not detail the transactions like dividends paid. Option D is incorrect because while the statement of cash flows does show dividends paid as a cash outflow under financing activities, the statement of retained earnings is the primary statement that reconciles the retained earnings account and shows dividends as a deduction from it. 47. Which of the following best describes retained earnings? A. Profits that have been reinvested into the company rather than paid out as dividends. B. The initial capital invested by shareholders. C. The total amount of assets a company owns. D. The value of the company's goodwill. Do you know the answer? Correct answer: A. Profits that have been reinvested into the company rather than paid out as dividends. Explanation: Option A is correct, because retained earnings represents the cumulative net income of a company from its inception that has been kept and reinvested in the business, rather than being distributed to shareholders as dividends. It is a key component of shareholders' equity on the balance sheet. Option B is incorrect because the initial capital invested by shareholders is recorded in accounts like common stock and additional paid-in capital. Option C is incorrect because this describes total assets. Option D is incorrect because goodwill is a specific intangible asset, not the accumulated profits of the company. 48. Which of the following financial statements provides a summary of a company's revenues and expenses over a specific period of time? A. Balance sheet. B. Income statement. C. Statement of retained earnings. D. Statement of cash flows. What do you think is the answer? Correct answer: B. Income statement. Explanation: Option B is correct, because the income statement, also known as the profit and loss statement, details a company's financial performance over a specific accounting period. It summarizes revenues, expenses, gains and losses, ultimately showing the company's net income or net loss for that period. Option A is incorrect because the balance sheet is a snapshot of a company's financial position at a single point in time. Option C is incorrect because the statement of retained earnings shows the changes in a company's accumulated profits over a period. Option D is incorrect because the statement of cash flows tracks the movement of cash over a period. 49. Which of the following ratios measures the amount of profit generated from each dollar of sales? A. Asset turnover. B. Price earnings ratio. C. Return on sales. D. Current ratio. Do you know the answer? Correct answer: C. Return on sales. Explanation: Option C is correct because return on sales, also known as the net profit margin, is a profitability ratio that shows the percentage of each sales dollar that a company keeps as net income. It is calculated as net income divided by net sales and is a key indicator of how efficiently a company converts revenue into actual profit. Option A is incorrect because asset turnover is an efficiency ratio that measures how well a company uses its assets to generate sales. Option B is incorrect because the price earnings ratio is a market valuation ratio. Option D is incorrect because the current ratio is a liquidity ratio. 50. What is the primary purpose of the statement of cash flows? A. To report a company's financial position at a specific point in time. B. To show how changes in retained earnings have occurred over time. C. To provide insight into a company's liquidity and cash flows. D. To summarize a company's revenues and expenses. What do you think is the answer? Correct answer: C. To provide insight into a company's liquidity and cash flows. Explanation: Option C is correct because the primary purpose of the statement of cash flows is to provide detailed information about a company's cash inflows and outflows during an accounting period. By categorizing these flows into operating, investing, and financing activities, it helps users assess the company's ability to generate cash, meet its obligations, and fund its operations and investments. Option A is incorrect because reporting a company's financial position at a specific point in time is the purpose of the balance sheet. Option B is incorrect because showing changes in retained earnings is the purpose of the statement of retained earnings. Option D is incorrect because summarizing revenues and expenses is the purpose of the income statement. You have reached the end of our first question set. For the free complete exam preparation, visit our website link in the description, where you find thousands more practice questions and comprehensive study guides. Thanks for studying with us today. See you in the next video.